This is the Friday, November 25th, 2016 version of the Market Plus segment. Joining us now is Ted Seifried. Ted, welcome back.
Hey, thanks for having me.
Hey, we're glad to have you, and we were excited that you were here this week. You're our resident gearhead here on Market to Market. And for those of you that are also gearheads and you want to dig in a little deeper on that timeless tractor story and hear more about Megan Miller, visit the website at iptv.org/timeless tractors. We had a crew and Megan with a GoPro. We followed her around for a year as she and her brothers restored an International 4166, the big old four-wheel drive. It's a very cool tractor. Go in and check that out, iptv.org/timeless tractors. Now we're back to Ted. We didn't get a chance to discuss cotton on the program.
Nope.
Broke a little bit this week, down 68 cents.
Yeah.
Are we obviously we're still within the range. Are we heading back down to test the low side?
Yeah, so we softened a little bit. Yield results coming out of Texas have been really quite good, and quality's been really good, partially due to, well, not partially, very much due to the phenomenal extended growing season that we've had this year. So that's put a little bit of pressure on us. But longer term, yeah, the outlook I think is pretty favorable. You were talking early in the show about new home or existing home sales and home sales in general being very strong. Well, I just bought a house, and this the new couch, which is covered in cotton, and so that's helpful for demand. Yeah, I think cotton has good reason to be where it is right now. I think there's a pullback that we saw this week, and then we could get a little deeper with that. But longer term, I'm pretty optimistic.
Mid-70s seems like the next maybe point to make some sales.
Yeah, I mean, psychological 75 is going to be right around where you want to take a look at that, yeah.
All right. Now, we do have a lot of questions from our followers on Facebook and on Twitter. And this is one that we have the question from Paul in Iowa, Northeast Iowa farmer on Twitter. But I hear this a lot. I know you hear this a lot when you're out speaking to groups. Mm-hmm. As a small producer, he grows 8,000 bushel a year. How do I best take advantage of this rally for 17 crop beans?
Okay, that's a great question, Paul. There's two things that we talk to guys. First of all, everybody says they're a small farmer, even if they're 30,000 acres. But there's two things that we would recommend for that sort of odd number, that 8,000. We can't really fit two contracts in there of futures. So you have the mini contract that's available. You could, if you wanted to go 100% on production, which I wouldn't recommend right now, Paul, but you could do a regular size futures contract and then 3 of the minis. That would equal your 8,000 bushel.
Are the minis as well traded as the main
There's
futures?
enough volume in there that it's it's liquid enough.
You can get in and out.
Yeah. Okay. The other way you can do it, if you want to match up directly with that 8,000 bushels, you can use delta in options, and you can use puts for that. But I think the best thing for Paul to do is to look at those puts. Don't be too afraid to spend a little bit to get close to the money on it, because after all, you're probably only going to need one for the time being anyways. And see if you can get yourself a $10 put for something relatively reasonable, and have that $10 floor going into, growing season. Well, South America's growing season, our growing season. That's a great floor to have, I think.
And you'd be comfortable buying a put with that, 11 months of time value in it?
Yeah, I mean, again,
on a one put, on a one contract deal.
If it's a single contract, I think I think that'd be very. Whether it's one contract or 100, I mean, you look at how much you're spending, and
right.
and yes, certainly for bigger operations that we worry about how much are we cutting into operational costs and things like that. So we look at put spreads and so on and so forth. But for smaller bushels like that, I think it's a lot more palatable to come in and own the one.
Yeah.
So there are things we can do.
Rough numbers. I don't know if you checked before the program to buy a $10 put today. Are we 40 cents ish?
Yeah, I think somewhere in that area.
Okay.
I was doing some $9.80 put spreads for. I don't.
Okay.
Remember off the top. Yeah, but that'd be reasonable. Right around a 950 to 960 break even on something like that is probably what you would want to expect. You can go a little further out of the money. You can also sell a call further away to offset some of that time value. But I wouldn't for that amount of bushels. I don't think I'd go in and sell a regular futures contract. one, you'd be a lot more sold than I would recommend at this point.
Okay.
And two, you got to worry about margin and things like that.
Right. Which at 8,000 bushel, spend the 50 cents ballpark.
You're probably not watching the market every day.
Right.
And
you don't want to call that banker with the margin call.
Yeah.
Loan.
Right. Owning a put is a very easy way to just kind of set it and forget it and have that floor in there.
At least you've got a little protection if you feel like selling some cash, if you feel like doing whatever you need to do. Next question, Trinity Ranch in Kansas wants to know, how long does the rally in cattle last, and what is your outlook on beef for 2017? We talked about it on the show.
Yeah.
Expand on it a little bit, Ted.
Right. I think for the time being, we could be getting towards the end of the cattle rally. I'm very curious to see what cash does next week. We saw bids getting strong here late on Wednesday, and a little surprised by that. This is sort of the time where we expect that better demand as we transition from turkey to beef. So beef demand could be strong here through the end of the year, especially with the holidays. But these are all reasons why we're kind of up here in the first place. I get the feeling that with the amount of cold storage that we have right now, that packers sometime very quickly get less aggressive on their bids, as they should. If you see that cash starting to fade, then I think there's a very good chance that cattle do pull back. Now, longer term, I don't really think we need to go much lower than where we were about a month and a half ago.
98, 99.
Right, 96 in the front month. Right. I think these are levels that we pretty much priced in a lot of the negative fundamentals at that point. I do think some sideways trade can be on the table for some time, unless China does come in as a bigger importer of U.S. beef. If that were to happen, we can get significantly higher, depending on how aggressive they are.
Right.
China likes to manipulate markets, likes to play games. They said earlier that they were going to be bringing in U.S. cattle. They haven't, before the end of the calendar year, they haven't done that yet. That might have been just setting the market up for disappointment so that we went down, and then at some point they could come in. So we'll keep an eye on that. But short of that big uptick in demand, I think there's some sideways trade on the table.
We're still looking at large volumes. Even the weights have come down. There is just a lot of beef. So we need to, for Christmas, for Thanksgiving, make a prime rib.
Let's eat some steaks, guys.
Let's do that.
Yeah.
Now, I want to jump down here. We had a question. You were talking about Chinese manipulation of the markets.
Yep.
And we had a question from former farm boy in Iowa. And he's on Twitter at Rural Mid Iowa. He's asking, in the bean market, is China buying for long-term need, or are they manipulating this bean market?
That's a great question, and really the only person, or the only way to answer that is China. We don't know. We'll see if they cancel some of these or not. With what happened in South America last year, where the tail end of the growing season is where we ran into problems. Everything looked good leading up to that, and the estimates dropped dramatically from mid-season to the end of their season. So I think they're maybe hedging some of their bets with maybe overbooking U.S., and we'll see if we do get those cancellations further on down the road. The other idea is that maybe they're very aggressively buying U.S. beans now because they're concerned about what might happen when Trump actually does get into office. So we'll see if this demand has all been front-loaded and if there's strategy for them behind this or not. But I will say, in the last few years, we've speculated or argued that this is all front-loaded. We're going to see a ton of cancellations, and those cancellations don't really come.
Right. And you look at the export pace of beans so far this year, we're not just selling a lot.
We're shipping a lot. We've shipped the size of the carryover, which a lot of people will say is a big carryover for soybeans that we're estimating this year. We've shipped more than that in the last 5 weeks. 5 weeks was what it would take to get rid of all of our soybean carryover if there was a South American weather problem.
Looking, based on my understanding, for at least 2 to 3, perhaps another 4 weeks of that pace of bean shipments.
It seems that way, and we've already passed the peak shipment week. That was 4 or 5 weeks ago.
Wow.
So the fact that that's continued to extend on, it's great. But again, you wonder, are they gonna try to get everything shipped out before January or before February? And then they're done with us, or I don't know. We'll see. But it's been very impressive so far. And ultimately, I think the way it feels to me is that there's really no price where China just says that price of beans is too high. They want them, they need them, they're going to keep buying them.
They'll write the check.
They'll write the check. So I think they're buying them to buy them. I don't think there's games being played here.
Okay.
I do think there could be games being played in the cattle market and some other markets. But I think with soybeans, it's just a function of they need them, they're going to pay the price.
Beef in China would be a luxury item.
Yeah.
Beans are not.
Right.
It is food.
That's right.
We've talked a lot about China. We talked a lot about China on the program this week. There's talk of China, Trump in China, and so on. Mm-hmm. As we look out to the broader world, we've got a question here from Martin on Twitter at Martin_Danner. He's asking, is India going to be an emerging export market for U.S. goods?
That's an interesting question. They do. So in India, as far as wheat, right?
Wheat, beef, pork.
Yeah.
Do we see any?
So
bright
beef and
spot
pork might be a possibility. Wheat. Usually when we talk about India, we talk about wheat because they are sometimes importers of wheat and they are also exporters of wheat. In fact, they'll do both in the same year most years. We don't ever look at them as being big potential for our wheat market. And if you look at the global wheat fundamentals, there's a lot of closer places that they'd pay less shipping to get similar quality wheat from. So I don't see that. Beef isn't really a staple food in India, so maybe not, unless tastes become more westernized and things like that. But pork is a possibility. So far, we haven't really seen that, but certainly population is there, and it's possible. I think when most people ask that question, they're curious about wheat. I don't think that they're incapable of importing U.S. wheat. I just don't see it being a big factor.
The value isn't there for them to write that check.
That's right.
Yeah, and you don't see them jumping into corn or beans as China has done anytime soon.
No, not really.
They've got a ways to grow.
Yeah.
Now, Phil, up in Ontario, Canada, thank you, Phil, for a question. Phil is asking, with bean prices where they are, do we see that shift to beans for 2017? Ted, are you more than 4 million acres going to beans in 2017?
Additional 4 million?
Additional.
Yeah.
Call it.
Yeah, hi, Phil. Yeah, possibly. I don't think we're there yet. I think if you get $11 beans, then yeah, we're very much so.
Okay.
Well, I should say, if we get $11 beans and $3.60 corn, well then yes, we're certainly going to see that shift. But you look at new crop beans, again, 1018, 1019 was the high here so far, and that's been a high for a while. I don't know if that does it to that extent.
And new crop corn, Dees corn this week at 380.
Yeah, in the general area. I wouldn't be surprised if at some point you see harvested acreage for corn and beans line up pretty close to each other. This might be the year, but I think beans, I don't think we've gotten to that price level yet where we're going to say, okay, 4 or 5 million acre shift to beans. I think somewhere in the 2 to 3 is what we're looking at right now.
Push up towards 86 million planted.
Yeah.
Okay.
But we'll see. Again, South America has a weather problem, and we get beans rocking and rolling, then we're going to plant a lot more beans this year.
All right, Ted. It's Thanksgiving week. Stuffing or dressing? Tim in Crookston, Minnesota wants to know.
See, I know what stuffing is.
Right.
I'm not sure what dressing is. It's
ranch. I'm an Iowa boy. You put ranch, that's a dressing.
I like ranch. I do like ranch dressing, but I don't stuff it in a turkey, actually. No.
Yeah.
No.
You're welcome, America.
Right?
Right, it's
But
stuffing.
I've not heard it called dressing before.
I haven't either. Those Minnesotans.
But yes, the stuffing.
All right.
Hey, call it what you want. I will eat it.
You bet. Well, Ted Seifried, thanks so much for taking the time to join us.
Pleasure's mine. Anytime.
Thanks for all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we hope you have a very safe and fun Thanksgiving. Thanks for watching.